matters. We're just good to go.
It matters this time
Yeah,
because
I
you
don't
look
think it
fine
matters.
to me, hon, but I get it.
Yeah,
I
it's
get
fine.
it. So let's begin. Hey
Yeah, let's
guys, everyone, thank you for tuning in today. This is our home buying seminar, and I don't like to use the word first time home buyer because there are also people here that have purchased before, and then they're just getting a refresher, or this is their second or third home or whatever. So I want everyone to understand and know that this is open to whomever, whether it's your first time, second time, if you're just looking at this time, you have not really made a decision on if you really want to move forward with purchasing, this class is for you. And so we'd like to start out introducing ourselves. My name is Keneshia Haye. I am a Jacksonville real estate broker, and I am also the owner of KHE Realty. I am here with my guest host, Carlie McLeod, and she is with Fairway Mortgage. I'll let Carlie go ahead and introduce herself.
Yeah, hi, my name's Carlie. So I am local to Jacksonville as well. I work for Fairway Mortgage. I'm a mortgage loan officer, mortgage loan originator, whatever you're going to call us. Basically, I do the financing for you to buy the house. So Kenesha and I work in tandem. So she goes and finds you the house out in the real world. I am sitting here at my
Exactly.
computer making sure that everything checks out with your financing so that we can get you to the closing table.
Which is the most important. We got to
That's the
get the
most important part.
financing
That's the
together.
goal.
That is the goal. And
Uh-huh.
so, what I like to tell a lot of people, they think that the process is hard, but it's really not. You have two trusted advisors here with you that's going to take you through the process, and we hand walk you. I've done several of deals with Carlie, and when I say she is on top of it, she's very, very communicative. She'll reach out to you at wee hours. Okay, so if your work schedule, I witnessed that, Carlie. If your work
Yes.
schedule is you're working at nights and only available in the mornings, she is available, and so am I, right?
Yes.
So
I
we
was gonna
work with
say,
you.
same goes for Kenesha.
Yes, we work with you guys. And so we like to start out with pain points, and we want this class to be interactive. This is a Zoom class, guys. And so, or a seminar. I don't want to call it a class, it's a seminar. And we want it to be interactive. So reach out to us, ask us some questions in the comments. And at the end of the class, we'll go to those comments and go ahead and answer those questions for you. So, what are some of the biggest challenges that people really face while purchasing a home? Or let's say it like this: what is one of your biggest headaches when you're thinking about purchasing a home? What are some of those things that people told you, or myths that people told you about purchasing homes that have got you scared?
Exactly.
This is the class for you to come in and let us get those myths smacked down. What are
Busted.
your pain points? Yes. So what are your pain points and obstacles? And then most importantly, what is your why for purchasing, right? Because that will help you combat all those noises that's telling you that you can't do it. What's the why for you? A lot of people say it's my family. I want to leave a legacy for my children, or you want to build some wealth. You know what I'm saying? Because real estate is one of those investments that really help you build wealth, right?
The
So
number
is that
one.
your it is. It really is. It really
Mm-hmm.
is. I was talking to a friend, Carlie, yesterday, and we were talking about stocks and things like that. And I was like, really for me, real estate is where I invest. I know it. I'm comfortable with it, but not only that, I've seen the return with
Mm-hmm.
real estate. So
Mm-hmm.
that's my first go-to. All right. And guys, drop down in the comments for me. What are your rents that you're seeing right now? What are you paying for rent right now? And because Carlie and I, we're a lot of times able to find you a home probably the same price or even cheaper than what you're currently paying for rent. So we can have that conversation with you, see what you're paying for rent. What are you comfortable with paying for rent? Because we possibly can get you even in a larger home if you're able to go up a little bit more. So things like that. We'll talk numbers with you guys. All right. And we talked about your pain point. Let me go on to the next slide, guys. Okay. Is it going to operate? There we
There
go.
you go.
Purchasing your first home should be exciting. I hear so many daunting stories from people that it is so hard, it's terrifying. And I'm here to tell you that it's not. I've done it. Carlie has done it. So we're here to walk you guys through the process, and we've walked a lot of people through the process already, and they're all scared. It seems like everyone comes to the process scared, and I wonder why. You know, people go out and they rent so easily, and I wonder, is it a commitment issue? Do people think that when I purchase a home, it's all said and done, it's all over? I like people to look at it at a brighter in a brighter way. When you purchase a home, it is now yours. You are
Mhm.
building wealth and equity for the life of this loan that you have. You know, you go into a rental, right? Yeah, it's comfortable, it's easy. The rental is easy because you sign in one document, okay, because you're not having ownership to it. However, now when you purchase that property, guys, when you get ready to sell it, you're going to have equity. When you get out of that rental, you're lucky if you get back your deposits. Okay, so that's the difference. You're building equity with a home that you're purchasing versus when you're renting. When you're done with it, you're lucky to get that money back that you put
Mhm.
down. Okay,
Mhm.
and this is the home buying process simplified, right? A lot of times we're able to get you into a home for the least amount. I know people say this astronomical amount of money that you need. There are programs and things that we're able to help you with. And I'll talk more about that on the next screen. But the first part of purchasing a home, guys, I will always tell you, we're going to get you with a lender. We have to know where your finances are. We have to know how much money you're able to borrow. So your lender are going to get with you, and they're going to ask you for different documents. They're going to ask you for different information. And Carlie is going to go further into those informations that they're going to ask you for. From there, the lender is going to give you what's called a pre-qualification letter or a pre-approval, which is way better. I work off of pre-approvals because that means, guys, it's going to be less headache. And Carlie, you can contest to this. It's
I
going to
absolutely
be
can.
less headaches down the road for you as you're purchasing to get that pre-approval versus that pre-qualification, because I guarantee you a lot of the headaches that mama had, cousin had, friend had, that tell you that the home buying process is so tedious, is because they gotten a pre-qualification versus a pre-approval in the beginning. That pre-approval saves us so much brain muscles throughout the process, because a lot of the hard work is taken care of. A lot of the guesswork, I should say, is taken care of. And therefore, we know that we have a more stable file to work with versus guessing and then having hiccups and heartaches at the end after you done put in some money. Okay.
Mm-hmm.
So now, once we got that pre-approval letter, guys, you and I will sit down and have that great conversation to talk now about does my new home look like? Do I want 4 bedrooms? Do I want 3 bedrooms? I have a family size of this, Keneshia. Can I look at homes like this? We talk about all that. What is most important for you in this home? A large kitchen is most important, or is the backyard most important for you? So we're going to go over all those descriptions and dynamics. And then from there, guys, since we already have that pre-approval letter, I'll go ahead and start looking up homes for you in that price range. I'm not going to go out of that price range. We can go below it, but I will not go above it, because I know people like to say, hey, we can go in and we can negotiate. But what I've noticed is, understand that you're going to be going in asking the seller for things also, right? So what I like to teach my buyers is, we don't just worry about just the cost of it, right? You have to look at the whole dynamic of an offer. So it's not about, oh, okay, I'm going to look at this house that is above my price range because I'm going to go in and offer a lower price off the bat. That's the wrong answer. That's not the way we set up negotiations, or not the way I work. So once we start working together, you guys will see how I formulate that offer for you, so that therefore we can get these houses that you're looking for, right? So from there, once I set you up to get those houses that you're interested in, and you see something that you're interested in, I set those appointments for you guys. And I like to keep it under 5 houses, because realistically, while you're out there looking at houses and you're driving around, too many of a good thing is not a good thing. You're gonna get confused, overwhelmed. I see a lot of people get overwhelmed because it's too many. So before we even go out and start driving around in this hot sun in Florida, guys, let's go ahead and we'll do our homework from the screen, right? So you've told me what you're looking for. I will scrub the list for you. Make sure that we're not going out there. If you're saying that you want a kitchen that has a dishwasher, and this and a wine cooler or something like that, and I look in the pictures and we don't see any of that, we don't need to go out there and see that, right? So we just won't do the waste time activities. We'll do the things that's going to get you into that home. From there, guys, once we select a home that you like, we're going to negotiate that purchase price. What does that look like? All right. So what I'll do is called a market analysis to ensure that you're not you're not going in overpriced on this property. We do a market analysis, and then from there, we'll submit the offer. And like I told you, the offer is not just about the price. We're going to frame this offer to make sure that it's a strong offer. Okay. Are we asking for closing costs? Make sure that if we're asking for closing costs, something else over here, we're not beating the sellers in the head for it, because you got to be realistic with it. Are they going to accept this offer? You know, so we'll frame the offer accordingly. From there, your offer is accepted. Let's say that your offer is accepted after we've negotiated with the seller. Now let's talk about what's called some in-transaction fees, right? The earnest money, for instance, or we call it in Florida, the binder. That's you, the buyer, saying, hey, seller, I am so serious about this sale. Take it off the market, right? Take the house off the market for me. And so when the seller takes it off the market, you're doing a good faith deposit that says, seller, I am not just going to wake up one morning and say, the sky is blue and I no longer want this house. If I do that, seller, you go ahead and you hang on to that good faith deposit that I made, right? And traditionally, it's about 1,000 to 1%. And I believe I have a slide here that talks about that, right? Let's see. Do I? Nope, I don't have that slide here.
Yeah.
But
yep. That's it. That's it. Right.
Going?
That right there. Yep.
Okay, so we have the earnest money deposit, right? And it's about 1,000 to maybe 1% of whatever that sales price is, right? And from there, you also have your inspections, because I will always recommend you guys to get a home inspection done. You've never lived in this house before, so therefore I would say get a home inspection completed on this home, right? And you'll also need to do what's called the WDO. That's your pest inspection, right? Especially when you're doing a VA loan. Carlie, you there?
Mm-hmm. Yep. Can you hear me?
Okay. Yep. My screen thing went stuck for 1 second.
Okay.
The pest inspection, that's required for the VA loan. But I would always tell anyone, regardless of whatever loan you're doing, you've never lived in this house, get all the inspections, the 4-point inspection, the wind mitigation. Those inspections are required by your insurance company. I will say still get those done because you've never lived there. Another fee is going to be your appraisal fee, your in-transaction appraisal fee. That's along the process after you finish your inspections. Now, collectively, I like to tell people about $2,500, I would say, have on hand for these in-transaction fees. And please remember, this earnest money or the binder, it is not money that's lost, right? It's still your money. This money is held at the title company. And like I say, it's your good faith deposit that says, I'm not just going to wheelie-dealy wake up one morning and say, the sky is blue, I don't want it, right? So therefore, it's still your money. As long as you don't default on the transaction, that money can be allocated to whatever you and your lender decide you want to use it towards in the transaction, okay?
Yeah. Yeah, I'll add one thing really quick, because I think you're touching on this. But if say we're saying your closing costs are $10,000 and you pay for your earnest money and you pay for your appraisal, that means your closing costs are $10,000 now minus those things that you've already paid for. So they're not in addition to your closing costs. We as lenders don't require the inspection. That's the only reason why that one doesn't count. But Keneshia and I could give you 100 stories on why you want that inspection. Let's make sure that the house is solid.
Exactly. True, Carlie. So I'll go back to here. So guys, the earnest money, that's that, right? So now the earnest money is turned in. Traditionally, we ask 3 days, but the contract is negotiable. Everything in the contract is negotiable. Okay. So traditionally, yes, we ask 3 days for the earnest money, but let's say we need an extra day or so. That's something that we can ask for in the contract. right? So
Mhm.
after you turned in the earnest money and you've completed your inspections and everything goes well with the inspection, you and the seller, if there's anything that is needed to be repaired, you and the seller, you guys can negotiate those repairs. Once that's completed, that's now when your lender will go ahead and order your appraisal for you. Once that appraisal comes back, as long as that appraisal is at the sales price value or above it, we just move right along to clear the close. If it's not, then once again, we're back at the negotiation window to go ahead and get that sales price negotiated to that appraised value, guys. And that's pretty much the process of sales. So this myth about it's hard, guys, it's not. From start to finish, that's how we take you through the process. You and I will work together as we're finding the house. Once we get the house under contract, then more likely now you and your lender will pick up really more so after that process, because now you're going for your final loan. So now I will turn it over to Carlie to go ahead and talk to you now about the financing part and any down payment assistance and closing cost assistance that they have right now.
Yeah,
Carlie?
sure. Yeah, go ahead. So let's go ahead and go to the next screen then here.
Mm-hmm.
Or Kenesha, you want to give me control again?
Yes,
Okay,
yes,
here, I'll
yes,
request it. I'll request it. Here we go. Okay.
there you go.
Okay, here we go. Okay, so yeah, so we've already kind of talked about the value of building equity in your home. So equity is basically the difference between whatever loan you have and what the home's value is. So anything in between those two things is your money, whether you bought the house at that price and the home skyrocketed in value, that's now your equity.
Yes.
And that's something that's really important. We've talked about how that's important to wealth building. So let's keep going here. So when you come to me, some of the questions I'm going to help answer for you is how much home can you afford? So we're going to go through your finances. We're going to see what the max loan value is that you can afford. So that way we give Keneshia a purchase price and she can go out and find your home. We're going to tell you how much money you will need to bring to the closing table. There's a difference between down payment and closing costs. So we can talk about that too. Um, in the strategy of deciding what loan product we're going to put you in, we want to know how long you're going to live there. Because that could be something that's really important in determining if you're only going to be, if you're a military person, which, you know, we have a lot of
Exactly.
that, we might need to decide on a different product because we don't want to put you in a ton of closing costs or monthly payment that
Mm-hmm.
maybe we could do something adjustable or anything like that that might better suit somebody that we know is not going to be in the home for long.
Exactly.
Uh-huh. And then we're going to always, so I know this feels really invasive sometimes, but we're going to be asking for a lot of financial documentation. At the very
Mm-hmm.
least, we're going to need pay stubs so we can see what your income looks like week to week. We might also need W-2s and tax returns. And then we ask for bank statements, not so we can look through your bank statements and be nosy. Nothing like that. We don't care where you spend your money. Only things that we're looking at are your total balances, and if we see any recurring large payments and anything that's dropping into your account, that's more than 50% of your income. Because if we see that, we got to know where that's come from. So any large cash deposits are a big no-no unless we can source them. So that's something we may need to talk about too. If you have a business or something that deposits large amounts of income in your deposit in your account monthly. These are
Mm-hmm.
just, and then obviously, I know everybody knows we're going to look at your credit score, right? So, big things that we look at. So, what you'll notice too, when we pull your credit score compared to what you see on something like Credit Karma, they can definitely be different. So, these are kind of the factors that we look at. But keep in mind, when we as a mortgage lender pull your credit score, it's almost always going to be a little bit lower than what you're going to see on Credit Karma. And why is that? It's because our algorithms are a little bit more strict than an algorithm where you just get for like a credit card or something like that. Because you have to remember, you're asking us to loan you two, three, four, $500,000.
Exactly.
So that we're going to be a little bit more strict than if you want a $3,000 credit card, right? We have to be. That's just the nature of the game. But regardless, you know, we have the ability to help with credit if that's a piece of the puzzle that is one of your pain points. So we can definitely talk about that. Let's keep going here.
Mm-hmm.
So like Keneshia said in her list, you come to me first in the transaction. You can absolutely talk to Keneshia first, but she's
Mhm.
not going to take you out to buy or to shop for a home until you've talked to me.
Absolutely not.
Because let's be honest, we're not trying to waste your time. We're not trying to waste Keneshia's
Exactly.
time. She's going out in the real world, spending real gas with you to take you from house to house. We want to make sure that there is no barrier in your financial portfolio that's going to prevent you from buying a home. Let's say you have a recent bankruptcy or something like that. That's not necessarily a lifetime deal killer, but it will kill the opportunity to buy a home for a year or two. So, we don't want to go shopping for a home and waste everybody's time. We want to work on fixing that first. So you're going to come to us. That's when we're going to get all this financial documentation, get an application, and go from there. Okay. Um, let's see. So I know you guys have probably heard the various loan options moving forward, but there are four major ones. Okay. There is conventional, there's
Mhm.
FHA, there's VA, and there's USDA, right? Conventional, we kind of think is our gold star, basically. This is usually the one that we want to get you in if we can. FHA will allow for a little bit lower credit and a little bit higher debt to income, which means you can have a higher ratio of payment compared to your income. VA, of course, is for our military. So if you are military, you can have a zero down payment. VA is an awesome option for you. And then USDA, the last one, is available in a large swath of the country, but it's only available in rural areas. So anywhere in like the heart of a large city. So here in the heart of Jacksonville, it's not going to work out for you for USDA. But if you move outside of the general area, we're talking McClenny, Callahan, out in Keystone Heights, things like that. That's where USDA works. And honestly, that's a large
Mhm.
swath of the country. That's the
It
majority of the
is.
physical land of the country. It's just in the heart of the big cities. A USDA loan is not an option. So those are your four big ones. So let's talk about down payment because that's a big question that people have. So as a first-time home buyer, when you're buying a conventional home, your minimum down payment is 3%. I hope you heard that because that is not 20%.
Mhm.
I know a lot of people think you have to have 20% to buy a home, and that is just not the case. So on a conventional loan, you can put as little as 3% down. If you've already bought a home before and you're not a first-time home buyer, it's 5. So just a little bit more. If we're going with that second option, that FHA option, where you might have a little bit lower credit score, it's 3.5%. And then the beautiful thing is our VA and our USDA loans are 0% down loans. Okay. That doesn't mean no closing costs. That means no down payment. So let's tease apart what those two things are. So the down payment is basically taking a percentage of the purchase price and paying it upfront, right? So that's not money thrown in the trash. That's not a
Mhm.
fee. That is
Exactly.
you paying part of your home down. So you keep that money. That is your money. That is equity in your house. You now have an immediate 3% equity in your house, which is great. So it's not gone to but I think people think down payments and closing costs are the same thing. A down payment is a portion of your closing cost, right? So in your
Mhm.
closing costs, you have your down payment. So anywhere between, whatever it's going to be, 3.5 to 0% if you're a first time home buyer, anywhere in there. It's going to have our fees as a lender. It's going to have your escrows, which are your taxes and your insurance that we hold in a little account and we pull from throughout the year so that you only make one payment. You don't make a mortgage payment and a tax payment and an insurance payment all of those are together. So we hold that money in an account to do so. And then your title fees, right? So the title company that's going to record your mortgage, make sure that your title is clear so that nobody has any sort of claim to your home, right? So the down payment is a portion of your closing costs. It is not the entire thing. Okay.
Mhm.
Hopefully that makes sense.
Mhm.
Let's keep going.
Yes.
Minimum credit scores. This is another touchy subject. So, like I said, conventional, your minimum credit score is a 620. Okay. Same thing for USDA, also a 620. Like I said, FHA is one that'll let your credit score go a little bit lower. So that's at a 580. And so the same thing with VA. So that one can also down to the 5. Now we do have specialty products that will go lower than that. The difference is if we go down to say a 500, which is possible, you're going to pay a little bit more in your interest rate. So we could take you down to possibly 500, but it'll just be a little bit more difficult to get approval. So, but
Mhm.
basically keep in mind 580 is your minimum. And if you're not there yet, that's okay. We can do credit plans. We can put you into counseling. You can get that credit score up. It may take a month, it may take a year, but you'll be in a better place to buy them. Even if you're still qualified, but you don't feel comfortable at a 620, you want to get to a 700, because the better your credit score, the better your interest rate. We can work on you that too. It doesn't have to be just to qualify. It might be to put you in the best possible position to buy. So you have both of those options. Okay. What do we got next here? Okay, first-time homebuyer program. So I'm going to talk about some here in Florida specifically. So there are things that help you as a first-time homebuyer getting in a home, because we know closing costs and down payment are a barrier to a lot of people to buying a home. I know that's a pain point for a lot of people to get in a home, is that you just don't have 5 figures sitting in a bank account to use. We know how expensive groceries are. We are all in the same country here. So we do have a couple different options here in Florida to help you with down payment assistance. So Florida Housing does a bunch of really great programs, and they can get you anywhere between $10,000 and 5% of the loan amount to get you into a home. And typically with all of these, you just need to have a 640 credit score or better, and you need to live in the state of Florida, be a full-time employee, things like that. Stuff that most people are. There are income limits and things like that, but they're reasonable. So unless you're making well into 5 figures, you probably will qualify. And the rates on these are also really competitive. Now, the only downside to them is these are not grants. So if you take advantage of these programs, they will be second mortgages that don't have any payment, nothing like that. You're not going to have any extra monthly costs for it. But once you sell the home, refinance the home, anything like that, that whatever money you took out for down payment assistance is going to come due. So it's something to keep in mind. It will get you into the home, but it will be money due at a certain point in time. And I think something that is really important to mention in this market right now, seller credit. It's not on our slide here, but seller credit is a huge thing. It's going to vary homeowner to homeowner, or home seller to home seller, what you can and can't get. But Keneshia, I feel like every deal that we worked on this year had seller credit, at least some portion of it. It's super common right now. So you can get the seller to pay something like anywhere from 2 to 6% of the purchase price towards your closing costs. So that varies between loan type, but anywhere between, no, it's not 2 to 6, it's 3 to 6. 3 to 6% of your, so imagine you can couple these two things. Maybe you get a little bit of down payment assistance, maybe you get a little seller credit, and now you're coming out of pocket with no money.
Except for those the in transaction fees.
Yeah. Well, and even some of those, like the appraisal, I can, we can have that paid at closing.
Oh wow.
And then you're not coming out of pocket for it. The only danger of that is.
And also we saw with one of our clients, the inspections was closed. Paid at closing. So that came with their closing costs as well.
Yeah. So you're literally you're buying a house and you're coming out of pocket with almost no money. It's possible.
Possible.
That varies seller to seller, whether they will give you that option, but especially right now, it's common. And when these rates come down, which we're expecting that is going to happen this year, that's probably off the table for a lot of people. So that's why we're saying, pull that trigger. If you're thinking about it. So, and I'm going to give you here, this is going to close out my portion here, but there are some do's and don'ts with buying a mortgage that maybe aren't common sense. So let's talk about them. So, and I already mentioned this one, depositing large amounts of cash into your bank account are not good ideas.
You're right.
So typically as a lender, when we see money deposited into an account that's cash that we can't source for any reason, if we can source it, if you sold your car and we have the bill of sale of your car or something like that we can source. But if you've got money sitting under your mattress that you're depositing into your account, you need to talk to me first, because we need to do something called seasoning, which means it has to sit in your account for a certain amount of time where it's just there on a bank statement and we don't see it entering the bank. That way a mortgage underwriter doesn't look at that and say, hey, where did that come from? Because if they don't see it entering the account, they don't care. But if they see $10,000 entering your account and you can't explain it, we can't use it. Okay. So that's a big one. So, and that goes for cash. If you have a family member that says that they're going to give you money, let's talk about that. Typically, we're not going to have them wire you the money. We're going to have them wire it at closing. They wire
Yeah.
you the money, we got to see a bank statement from them. And most people don't like to provide a bank statement. I get it. You know, nobody
Right.
wants us in their business. So if we want to avoid that hassle, then just speak to us first, and we will probably just have that family member just wire it directly to closing when we're ready to close.
Mm-hmm.
This may seem like something you wouldn't have to think about, but don't quit your job. Okay? Don't quit your job,
It happens
because
all the time.
when you submit me stuff at the beginning of the process that shows me your income, that shows me your credit report, that shows me your bank statement, we are going to check those at the end of the transaction again. Okay? That is not a one-time thing that happens and then you're good to go and you can do whatever you want. We will check again. So
Mm-hmm.
if you submitted your application with $20,000 in the bank and a good job and all this kind of stuff, and then once you submit that application, you quit your job, you spend that money on furniture to put in the house, you know, run up all your credit cards, so you know you've got a bunch of extra debt that we didn't know about, that can kill the deal. So you are on basically a financial pause when you're going through this process. Anything that
Yeah.
you need to do, just run it through me first. Let me
Mm-hmm.
make sure that it's not going to affect your ability to qualify and buy a home, and then we can go from there. Okay. So that
Right.
includes, you know, once you get pre-qualified, don't go open up a loan at Ashley Furniture and buy a bunch of stuff yet. Let's wait till after the transaction for that. Okay. No new
You
debt. No new debt. Because if your numbers are tight, that could be something that could push you over the edge and then you're no longer qualified. And it happens.
exactly.
It's happened so often. And I just, you know, just like I said, think that all of your accounts are almost frozen when you come into this process. And
Mm-hmm.
let's just not add any new debt. Let's not take on any new liabilities that could prevent you from qualifying. So things that you should expect. You're going to have your credit pull. We can do soft pulls. That's okay. Before you go to an underwriter, it will have to be a hard pull, but to begin the process, we can do a soft credit pull to start. Okay. We are going to ask for pay stubs. We're going to ask for various things like possibly W-2s and tax returns. Have all that ready. We may not
Mm-hmm.
ask for it in the beginning, but it's probably going to come up eventually. Talk to me and Keneshia. So we want to know if you're getting gifts. We want to know any other money that's coming in. We want to know if you have a tax lien, things like that. We're going to find all that. We will find it. Come into
Exactly.
the transaction assuming that anything that you haven't told us, we will find. So might as well just get it all out in the beginning. Then there's nothing to worry about, and we'll make sure everything is good to go. And make sure all your personal information is spelled correctly. So when we pull a credit report or your taxes or your tax filings from the IRS, things like that, these are things that we do. If there's any misspellings on this on your driver's license, it just throws a wrench in, and we have to get everything fixed before you close and blah blah blah. So just spell everything correctly. That seems intuitive,
Yeah.
but yeah, that's kind of, see, it wasn't so scary. Easy stuff. So let's see if
Mhm.
anybody's got any questions that we
Any
can answer.
questions?
Any questions?
Okay.
Keneshia, anything that
Mm.
you wanted to add from what I said?
No, that was it. Really, Carlie, it's that simple. It's not a hard task. I get this
Mm-mm.
all the time from people while I'm taking them out, showing them Carlie. As of late, like, this is it? Really? I thought it was going to be harder. And I was like,
Yeah.
give me an
Yeah.
example. It was like, well, when my mom purchased, they said that their realtor did this or they did that, and it was this issue and that issue. And I'm just like, it doesn't have to be
It
that. And
doesn't
like
have
I
to be
said
that way.
at the beginning, Carlie, I think a lot of the people's headaches and turmoil is because they get this pre-approval. Someone on the other line, a lender on the other line says, how much do you make? Tom says, oh yeah, I make $120,000 a year. Nothing is
Mm-hmm.
verified. All it is
Mm-hmm.
verbiage from him. Oh
Mm-hmm.
yeah, all I pay for is my car. My car note is
Mm-hmm.
450. I'm renting from
Mm-hmm.
my sister. I'm really not paying her that much. And then now here we go. We look for a house. We find this house. And now you're going through the pre-approval process. And then woe and behold, the lender is like, okay, send me this, send me this. Then they look
Mm-hmm.
at those documents. Oh, because of this, I need you to send me this and send me that. This is
Mm-hmm.
things that can be lined out early in the
Yes.
process. So
Mm-hmm.
then your process could be more enjoyable. I like it when we get
Easier.
to the walkthrough at the end and you're seeing this house that you're going to be moving into tomorrow,
Mm,
signing day, and you're ecstatic instead of the day before you're pulling your hair out like they're asking me for something else.
mhm,
That's the
mhm.
reason why they're asking you for something else, because it wasn't done early
Up
on in
front.
the process.
Hmm.
Yeah.
Yeah, so we're going to be a pain in the front. We're going to ask for a lot of stuff, but know that if we ask for a lot and you provide us a lot in the beginning,
Yes.
that's when the work is done then. So then by the time we get to the underwriter, they have everything they need. We're not pulling our
Exactly.
hair out. So I do the heavy lifting up front to make sure everything's good. And we talked too about the difference between a pre-qualification and pre-approval. And I don't think we explained.
Right.
Pre-qualification is just me reviewing your documents, and I'm going to review your documents before I give you a pre-approval. I am not a lender that will give you that without seeing stuff for
Yes.
the many reasons that we've talked about. Some people will.
Exactly.
Some of these online places that will probably give you a pre-approval quickly,
Mhm.
and then that will fall apart at the closing table. So we're going
Exactly.
to ask for a lot up front, but that will save you a lot of headache later. So then that's a pre-qualification. A
Mhm.
pre-approval indicates that an underwriter has reviewed all of your financials and given you what they call conditional approval. Basically, you as a borrower, you're good to go, or you and your spouse, good to go. The
Mhm.
only conditional piece that we don't have is the actual home. So that's
Yeah.
what we call it, a TBD, to be determined. So the underwriter has already said you're good. All the thing that we have to pass through underwriting then at the end is the home. So that's just going to
Mhm.
be basically, passing an appraisal, making sure the appraisal comes in at value. Everything else is already good to go. And not to mention, is that nice for you to just know that you're set and ready to go. A seller of a home loves
Mhm.
to see that because they
Yes.
know that they're not going to deal with a headache later. Keneshia can
Exactly.
speak to this.
Exactly.
A seller knows, like, okay, an underwriter has reviewed this already. Okay, I feel more comfortable accepting that offer because that's less variables on the table. That's less risk for me. I'd rather take this because I know we're already good to go. So
Exactly. And
easy
hence it
peasy.
makes the process more simpler because now the
Mm-hmm.
seller is aware that you already did the legwork up
We
front.
did the work.
They're not going to have to worry about the deal falling apart in the end. So therefore, yeah, they will entertain your offer.
Mm-hmm.
Once again, that's one of those things that I told you, you frame your offer. Is one of
Mm-hmm.
those things, and framing your offer is to have that pre-approval letter. Yes.
Yeah.
So Carlie, do you have anything else that you want to share, or we could go ahead and close this out?
I don't think so. I mean, I think that kind of lays out all the specifics. Obviously, I think we have a last slide here that has all of our information on it.
Yes.
So, you are welcome to call. Oh, where'd it go?
Where did it
Did you
go?
lose it on your end?
Oh, yes.
Oh, wait,
Hold
wait,
on.
sorry.
That
Uh,
wasn't true. I think I clicked, I
it's okay.
touched something. There you go.
There you go. There's all of our information. So this is where you reach out. If you have any questions, you can always text, email, whatever, and we would be happy to respond. And if you need to do a Zoom call with us, we will hop on and we will get done whatever we need to do.
Yep. Surely will. Surely will, guys. So thank you all for tuning
Yeah.
in today to our home buying seminar, answering any questions you guys may have. We're going to be doing this every Friday during your lunchtime. So grab yourself a snack. Sometimes we may be on here munching too. So don't hold it against us. It's our lunchtime also,
Yeah.
right? And
And
we're just
refer a
taking that
friend.
time. Huh?
Refer a friend.
Refer a friend, refer a friend. And maybe sometimes we get on here, Carlie, we may do some giveaways or something like that, but that's neither here nor there. We'll think about some
Mm,
things like that. But
mm-hmm.
come on over and get some information. I know there's those of you that have those daunting questions that pop up. Write those down, send us an email or go on one of our socials and leave us a message, and we'll definitely answer your questions here, guys. All right. So
Okay.
without further ado, we wish you guys a beautiful, great day. And come on back next week and have
Yeah.
some fun with us.
Mm-hmm.
All right.
Bye,
All
guys.
right, guys. See y'all later. Let me hit the
See
next
ya.
share. Bye-bye.
Did it stop recording? Okay.
Mm-mm.
Okay. Well, I
See
mean,
how, let me see how I end this. I gotta try and end because I'm in the I'm on YouTube also live stream.